items, but if we can't do it, we can't do it.
Okay. We will try to get to you after the dinner break here, but I think I'd like to jump to our agenda and make sure we cover, we have our auditors here, and I'd like to give them an opportunity to make sure they cover the audit report with you. But we have a 10-year pin tonight for Derek Bell. He'll be here, Ray, and he'll be introducing him. We have a 10-year pin for Jared Crack. Y'all may know he is the son of Joe Crack, who's in our police department, but I will be introducing Jared. And then we have a 35-year pin for Mr. Bob Freeman. So we'll be ready.
All dressed up to get the pin.
He's dressed up every day now. And then Ms. Sherry will be receiving Excellence in Libraries Award. I know there are just a handful of libraries in the state of Texas that receive that award. And you typically have a number of your library board members here with you to accept that award, so I assume they'll be here tonight.
I think we'll have a couple.
Okay. And then we will have a presentation in open session by Adam McCain with Weaver of our comprehensive annual financial report. I didn't recognize Jackie is with us back here, our assistant finance director tonight. I think Janine is taking a well-deserved vacation after getting the audit done. So, and we will cover that here in just a second with you. Do you have, Adam, do you have those hard copies to hand out?
Mm-hmm.
If you want to go ahead and do that, we can stop here and let you make sure we have enough time for the questions you might have on the audit. I believe you received a CD. If you didn't, Jackie has a CD that you can keep that electronically. You're welcome to return the hard copies after the meeting time if you don't need that. On the CD, you have your budget, you have your capital improvements document, and you have the audit, and all of those documents will also be made available on our website for our citizens. And I believe the budget and the capital improvement plan are already out there, and of course the audit would be added after you accept it tonight. So, Weaver has been our auditors for a number of years, and Adam and his staff does a great job. So, I know Jack is excited to have this done. I can't say how hard the staff, you all know they've been working very short-handed in the finance department the last few months, and I know that Janina and Jackie and Ross have spent most every night and most every weekend up here for a number of weeks to make sure we get this out for you tonight. So. Thank you. And I might point out too that you're not being asked to approve the audit tonight, you're simply being asked to accept it. So after you hear the report and you take this home and study over it, if you have questions, we can certainly refer those questions back either to the finance department or to Weaver at that point. And yes, if you can just hand it out.
Great. Very good. Well, we appreciate the opportunity to be here with you guys today to present the audit as the city manager pointed out. I'll just kind of run through you guys' time. I'll try to be quickly, but I won't be thorough too. And you guys feel free to stop and ask any questions at any point. I get very excited and start talking pretty quickly when I talk accounting. So if I miss you guys, if I lose you guys somewhere, please stop me. So what I've got on our agenda to talk about today is simply the high-level summary of the audit results. We'll kind of discuss briefly the comprehensive annual report that you guys have in front of you. Touch on some of our required communications that we are required to make to you guys as the governing body, and then let you guys ask any questions that you've got. But like I said, if you do have any questions, please feel free to stop. All right, so if you remember nothing else that I said today, we did issue a clean opinion, unmodified opinion on the financial statements, which is has a level of assurance that we're able to give on those financial statements. Also, we did not note any material weaknesses. We did not issue a management letter this year, which is what, if you remember in the past, if we did have any internal control deficiencies that we felt like we needed to communicate to you guys, they would be included in that letter. Lastly, we did receive all of our information timely and accurately. As your city manager pointed out, your finance department has had some turnover, and so I think that Ms. Terrio and Ms. Jewell and their staff are certainly to be commended for the work that they put in. They put in a lot of work to prepare for us in advance of us coming out and then getting us information as quickly as they can. It really helps us to spend more time auditing as opposed to preparing the financial statements, makes it so we can really do our job much better. So we certainly appreciate that. So in the document, the bound document that we just handed out to you guys, there's really three main sections. Your introductory section, which is information about the city. There's a letter prepared by the city manager's office. And it's also got your GFOA 2013 certificate. The city does submit this document every year to the Government Finance Officers Association, which reviews it for compliance for their award. And it takes a lot of work to get that award. There's a lot of extra information in here that is not necessarily required just by the accounting standards, but if you want to get that award, you have to pull that information together. So again, the city's certainly be committed for that. Financial section, which will include our opinion, which I mentioned is a clean opinion. The MD&A, which is kind of a plain English discussion written by management about the financial condition of the city and some information that they feel like is important to highlight for the financial statements. Financial statements themselves and the note disclosures. Then the statistical section, which is really that additional information that I was talking about that is required to get that GFOA award. There's information that are related to financial trends, revenue capacity, debt, demographic, and economic information. So again, it's a lot of information that has to be compiled by city's management to put together, and includes a lot of 10-year trend information. So it's a great place to see kind of how the city has changed over the past 10 years. So I will just go through a few financial highlights with you guys. We'll start with the statement of net position, which is page 18. If you're going through if you're flipping through the document itself. And so I will remind you guys that as a governmental entity, essentially you have to present your financial statements and say numbers in two different ways. One is if you are essentially a business, which would include all your capital assets, your debt, and then all the related activity. The second way that you have to present it is on what we call a modified accrual basis, which is really the way that you guys budget. It's kind of a economic resources method where you budget based on what your actual cash outflows will be for the year. So capital expenditure would actually not get capitalized, but would get expensed. Same with your debt service payments. So just a few things to point out here. Again, governmental activities. This is that business type presentation we talked about. You can see total assets and deferred outflows of about $169 million for 2014 compared to $168.
What's a deferred outflow?
Yeah, that's a very good question. So there was some new standards implemented. It's got to be 64, I believe. It's been presented this year. And so what Gatsby has decided is that assets and liabilities was not enough. They're going to make you present assets, deferred outflows, liabilities, deferred inflows, and then you get your essentially equity or net position. So your deferred outflows would represent kind of like deferred charges, similar to a prepaid situation. So if you have paid out information, but it's paid out in the funds, but you're not actually going to be able to take advantage of that money that you paid out until a future period, then it gets reported as what we call deferred outflows. So what the deferred outflows are here is deferred gains and losses on refunding bonds is the only deferred outflow that you guys have on the books.
We had bets that somebody would ask that question.
Did you bet on who?
No.
So if anybody ever tries to tell you that assets minus liabilities equals equity, you can argue with them and say, no, that's not necessarily the case. So you can see net position, and you'll see comment of the same total net position as restated, and I'll get to that in a second. You can see $123 million in net position or equity for 2014 compared to $116 million for 2013, about a $6.2 million increase. That restatement that we mentioned there is, I know restatement sometimes can be looked at as a dirty term. Here's not a dirty term at all. Accounting standards changed. This is another change this year. Gatsby statement number 65 was implemented. All governments are having to implement it. And it deals with some of those, actually some of those deferred charges as well. And so in this case, what we have is a situation where debt issuance costs that previously were capitalized, so attorney fees and things like that were Previously, they had to be capitalized, but this statement number 65 said, no, you can't capitalize those anymore. You're going to expense them as they are incurred, and you're going to retroactively expense anything that you have incurred in the past. So, again, restatement here is not a third term. Everyone's doing it.
How far back did you have to go to restate?
Anything that was sitting on the books. So it's really just your beginning net position. So if you go to, in fact, I'll flip to the next year. Let's see. So all we had to do is, if you go to, we're going there anyway, page 19. On page 19, you'll see that there is a, as presented, beginning net position. We just changed that beginning amount. So it's not like we have to go back and restate all the previously stated statements. So it's the statement of activities, which is the essentially an income statement that goes with that balance sheet that we just looked at. You can see essentially a change in net position on net income of $6.2 million for 2014. It was $7.8 million for 2013, about a $1.5 million decrease in that change in net position. Still a positive change in that net position for 2014. Moving on to page 20 is where we have the fund level financial statements, and this is given the levels which you guys adopt your budget. So you can go recognize those in the general fund there. You can see total fund balances in the general fund for 2014, $10.8 million compared to $9 million for just under $1 million increase in the general fund balance for 2014. All the other governmental funds, $17.5 million fund balance for 2014 compared to about the same 2013, just a slight increase there in 2013. So again, flipping to page 22 in your CAFR there, you can see a statement of revenues, expenditures, and change of fund balance. This is essentially your income statement that goes with that balance sheet that we just looked at. You can see 2014, you get a $960,000 increase in fund balance compared to a $579,000 increase for 2013 for the general fund, and then your other governmental fund is about a $65,000 increase compared to a $2.4 million decrease in 2013. And then moving on to your enterprise funds, primary enterprise fund being water, wastewater. The other ones would be softball, golf, things like that. So you can see water, wastewater total net position of $43.6 million compared to $44.2 million in 2013, a slight increase, $618,000. The other enterprise funds, $26.7 million net position compared to $26.9 million net position in 2013, so it's just like $173,000 decrease in that net position as well. Again, here's the income statement that goes along with that. You can see the water, wastewater had about $619,000 excess of expenses over revenues for 2014 compared to a $347,000 excess of revenues over expenses. 2013, so a swing of just under $1 million there. Then the other enterprise funds had a excess expenses over revenues of $173,000 for 2014 compared to $353,000 excess of revenues over expenses in 2013. So the notes of the financial statements start on page 31. I would encourage you to read them, include summaries of the city's significant accounting policies, additional details about amounts that are reported in the financial statements. The primary one that I will point out to you would be note 13. I'm sorry, not the page number written down here. It's the very last footnote. And what it does include is, it's on page 63. It includes the detail on that change in accounting principle related to GASB 65 that we talked about. It essentially reconciles the amounts that we listed as restated to what amounts were actually reported in your CAFR last year, so you can actually see the difference and how that impacts your beginning net position. Lastly, there's, like I said, the statistical section. I definitely encourage you to read it. Management goes to painstaking links to gather all that information, and so I certainly encourage you guys to take a look at it and read through it and have a good understanding of it. Lastly, what we've got is our required communications to you guys as the board. You've got a letter on our letterhead in front of you. That letter contains this same information that I'm about to go through with you. And so I'm not going to go through the letter, I'll just touch on the items that are in here. Primarily, I want to point out that our responsibility is to audit the financial statements. Management is responsible for preparing financial statements, giving us the numbers, giving us all the support for the numbers, things like that. So, and again, like I said, management does a fantastic job pulling all that information together for us. We certainly appreciate that. Here we also point out any changes to the financial statements. Again, as I said, GASB 65, which have that restatement, is really the biggest change to the financial statements this year. That's really what we got here. Other than that, there were no unusual transactions this year, nothing that surprised us that we felt like management was trying to be aggressive or anything like that. We're comfortable with everything we've done this year. Certainly not aware of any fraud or legal acts. As I mentioned to you guys earlier, also no material weaknesses in internal control were noted. We do provide, so as I mentioned, there's several items in these financial statements important to keep in mind. We provide an opinion on the financial statements and the footnotes. The MD&A that we talked about, we provide what's called an in relation to opinion. Essentially, we read through it, make sure that it's consistent with the financial statements, but it's not actually audited. And then the other information in here, the statistical section and the introductory section are completely unaudited. We do flip through and make sure that, again, we feel like the numbers are consistent, management isn't getting anything misleading, but we don't work those as there are a few estimates in these financial statements. There are estimates related to the allowance for uncollectible receivables, estimated useful lives for capital assets, the other post-employment benefit obligations or assets, all include estimates by management. We do look at those estimates, look at all the inputs that management is using to come up with those estimates, and are comfortable believe that they do present accurate information and believe that they're reasonable with respect to these financial statements. As I mentioned, we didn't encounter any difficulties or disagreements with management. Management has provided us with a representation letter. When we issue our financial statements, they provide us a letter that essentially reiterates the information they've given us as accurate, given us everything that we've asked for. So we have received that from management. We're not aware that management has done any opinion shopping, asking other accountants for other opinions, anything like that. We do not know any independence. We evaluate our independence at the beginning of every audit to make sure that we don't have any independence issues with respect to our relationship with the city. If you listen, we certainly don't. We did not make any audit adjustments that we need to report to you guys. So again, that's just additional support for the fact that management does such a great job maintaining and preparing for us. There are two what we call past adjustments that are attached to the letter that I've given you guys. Past adjustment is essentially something that if management was going to go through the time and effort to put every dollar exactly where it should be and have cut off exactly as it should be, that they would go through and do it. There's a cost-benefit analysis and consideration that goes into everything, and so these are a couple of adjustments that we didn't feel like were necessary. Management agreed didn't feel like they were necessary, but we are required to communicate those. Outside of that, we've not issued any other written communications with management that we need to communicate with you guys. I'd be happy to address any questions that
Well, when you had your bets, was there a bet on anybody asking where we changed from an unqualified opinion to an unmodified opinion?
I'll let Adam address. I had no bet on that.
I believe this is year 3 that we've issued an unmodified opinion.
I'm pretty sure you were unqualified last year.
I hope not.
I think that GASB is trying to get it where you cannot understand or read any of these. That they are obviously the accounting standards body and that we have to follow. But some of these, I'm sure they serve a good purpose. But assets and liabilities, you know, it used to be fine, but now we've got deferred inflows and outflows, and now we have all this stuff. So, but it used to be a high qualified opinion. Now they've changed that as well. So.
Yeah.
But,
Nice to know that you're qualified.
Yes, exactly.
one of the things I might point out is he was showing like, remember when he shows a year-over-year comparison in the general fund, you see a drawdown in fund balance, or the increase in fund balance was less than the prior year. Remember that the city uses a pay-as-you-go methodology, so we cash flow. So sometimes because of timing, you're going to see a decrease in one year and then maybe an increase in the prior year. It doesn't mean that the situation is deteriorating. It means that we have saved up money and we made a cash outflow to pay for those expenditures. On the enterprise fund side, I think you saw a decrease in the net position. If you'll recall, we had closed our Texas Star for 3 months, so there's 3 months of the summer that you did not have a revenue stream, so that had an impact on the net position.
Plus, we had the expense that we had saved up to do the greens and all the work.
So there, you have to sometimes, when you see a negative number, you have to realize the context of that. Is it because we had a planned drawdown and that was the case here? There's not anything that was different than what we had really expected. I'd say in the water and sewer fund, obviously, we've been reporting throughout the year because of the conservation measures and so forth. We have seen a reduction in our revenues there, so that would be probably the only thing that I would point out that might be down from our budget expectations. Jackie, would there be anything else that you would want to add to that?
Yeah, that's primarily okay.
If there's any other questions for Adam tonight, we can certainly take those. If not, then if you have an opportunity to redo this and have questions, we're certainly happy to get those to him and get a response for you at a later date. So we know you can't digest all of this here in the next 5 minutes before you accept it. So, council meeting. So, any other questions tonight? He will present a shorter version of this in the council meeting. He will go through the report. He will not cover the management letter that is obviously designed to be communicated to management, but he will cover the audit in that. So I think we will break there and have dinner, and then we'll pick back up with the agenda when we get back, and if we have time, we'll get to Mr. Rhodes' update. And dinner is courtesy of Mr. Zimmer tonight. We were having Ray's approval, it is, so.
George, Chris, let these take.
Yes, I'm glad you said it.